Okay, good afternoon. It's Monday, March 22nd, 2:40 p.m. Price of Bitcoin currently at 55,974. Looks like we had a bit of a sell-off. Nothing too crazy just yet, but obviously a point of concern where we are right now in terms of price action. Today's analysis is not going to be more so on the smaller timeframes, but larger picture of what is happening in the market as a whole, whether it's crypto, whether it's the stock market, bond market, the things associated with crypto and Bitcoin metrics, on-chain metrics, etc. Right? So the first thing that I want to cover is exactly where I am in terms of market structure. Okay, so the one thing that we have to kind of look at is when we look at price action, okay, generally, I like to pay attention to, first of all, the overall trend in the market, and then key moving averages like 20 moving average, the 50, the 100, the 128. I would say the most usable one in Bitcoin at present moment on the daily is the 20 MA, which has generally held up price over the last several months on this entire trend up. And as you can see, it is once again holding up price right here. So in my opinion, a very good sign that BTC is right around that 20 MA. It's very possible that we do something like this over here as well over the next coming days, but it doesn't necessarily mean that from here we have to dump straight down or anything. It just means that when you start breaching the 20 MA, there's some near-term risk. Near-term risk as in start looking at the highest support levels on that specific time frame, like the daily or even the weekly. And the biggest support levels on this time frame right here, if we're looking at, say, breaching this 20 moving average that you're seeing like this, right, would probably be down here, down in this area right here, okay, which is around $46,000 to $47,000. Let's just say 45 to 47, right? That $2,000 pocket is what we want to be paying attention to, just in case prices do start to break down. And guess what? Even if we break down all the way there, around 45, which is where this pivot is, this monthly pivot, it still doesn't mean that from here, we've now changed the trend and we have to start going down. Because in the larger picture, here's a couple things that have been happening. So for Advantage members, I told y'all that make sure you check out this article from Jarvis Labs. I posted this in the Bitcoin analysis section. Make sure you guys check this out because there's a lot of good metrics in here that show us, first of all, the macro backdrop that we've basically set, which is the bond markets, the DXY, the Fed printing, all this stuff is giving more of a case for Bitcoin and its existence to keep thriving, right? So I think that part you guys very well know. I don't need to reiterate all the stuff that's happening from the Fed printing all this money, right? On top of that, we have this environment where there's sort of a hyper growth environment, especially in the stock market that we've been experiencing since last March. This was the drop from the pandemic. From there, we just took off, right? If you were to look at this on, say, a line chart like this, I mean, you could see this is not even really that big of a drop. It's like we just, maybe just dropped real quick and then just took off, right? This to us in the longer time frame of things is probably a meaningless event. And I think same goes for Bitcoin when you look at something like that, which is on the longer time frames, okay? If you pull out this chart like this, all right, and you turn off this 20 MA, you can see this drop right here, though it's sharp, in the context of where we are and where we might be headed up, say higher, it really doesn't matter. But what happened in this area in March was the excessive growth of the Fed balance sheet, which is a lot of money being printed, a lot of money being placed into the system, low interest rates, a very heavy growth environment that has been driving markets like crypto, like Bitcoin higher and higher. And guess what? We haven't really pivoted away from that. It's not like the Fed is raising interest rates anytime soon. It's not like growth is going to stop anytime soon. And it's not like the money that's out there is going to stop or slow down in terms of printing, right? Because the government still has to keep printing all this money to ensure that the markets are stable, that unemployment is going to stay low, that people still have money to be able to pay their bills. And this creates a very, very good macro backdrop for something like Bitcoin. So I believe in that. And also it's available in this article right here that I shared with y'all. Okay, so make sure you guys go check this out. Now, the other part of the equation is, well, where are we in Bitcoin in terms of cycles? Okay, well, for that to understand, we have to look at some of the on-chain metrics that people generally pay attention to. On-chain metrics, as well as say the other charts that people have developed over the years. For example, the MVRV score. This is something that a lot of people pay attention to in Bitcoin. It's kind of like your own, overbought and oversold levels of the market. When there's a whole lot of exuberance in the market, we tend to move away from this red area. And this is generally a top, or rather historically, it has signaled a top. Okay. If you look at the MVRV score, it uses blockchain analysis to identify periods where Bitcoin is extremely over and undervalued relative to its fair value. You can read more information on this. And you can go to lookintobitcoin.com and look this up. So one part of the equation is that we are quite far away from this overvalued area in the MVRV score valuation. So that means in terms of the metrics of Bitcoin, we still have a pretty big move left to the upside. It doesn't matter what's going to happen right here. Like I said this morning to Advantage members, I believe from here, markets look a little bit shaky. But just because they look shaky doesn't mean I'm calling a top. In no way do I even have the guts to be able to call a top on Bitcoin, because it has aggressively outperformed every single asset. And the bulls have clearly dominated this market and pretty much put the bears to bed. So if I was ever thinking about taking a short position or calling for a local retracement, it is simply that I'm looking for protection. Protection in terms of hedges, protection in terms of keeping my retained value in USD or BTC or whatever part of the portfolio that I'm trying to protect. So I just want to make that clear that whenever we have conversations about Bitcoin retracing or pulling back, you don't need to get up in arms about anyone calling the top, okay? It's okay for us to imagine a world in a time where Bitcoin can pull back another 10, 20%, and everything can still be okay. The world doesn't fall apart just because we have another retracement, all right? So this is one thing that I want to inform Advantage members about, because there comes a time in most people's trading career or their investment thesis and in their mind where you may just get too exuberant in the market, where you refuse to believe some of the metrics that are being shown by Bitcoin or some of the data points that show that you might be getting a pullback. And if you get that pullback, you might be getting some of the most amazing buy the dip opportunities, but you're too adamant and too unaware to see that, hey, it is possible that we can get another 10, 20% sell-off, but still be extremely bullish. And this is the case for a lot of people in Bitcoin, because at some point, what really happens is you become a cartel, right? You have this mindset of, well, it can't go down because I'm in a long position. I don't want the market to go down. So your thesis of wanting to have Bitcoin go up is directly tied to your positional bias, because you're long. You want the market to keep going up so you can keep making money. But what you don't understand is even the people that wish for a pullback of say 10, 20%, like I do, I relish in the fact that if I get that pullback, I will be buying the dip, because I will have protected my cash in such a way where I have enough funds to buy the dip. But most people don't, because they're not prepared. All you're really hoping for is the market to keep going up or bail you out of your long position. And this way you kind of pigeonhole yourself into a bad area where what happens is, well, the market maybe pulls back a little bit. And then you think, okay, from here, I might get an exit right here into my long, which I open here or here. And this way I don't lose so much money. And then what happens is the market heads down further. Now you're further deep underwater, and then it goes down further. Now you're close to very big losses, and then it goes down further maybe. And in this area, this is probably the max pain area, right? This is where you're close to your liquidation point, close to your breaking point, and we might spend 1, 2, 3 weeks here, but you can't handle the pain because you don't know if it's going to go down further. And the meanwhile, you're probably paying funding in this whole area and you're losing money that way. So you could see it becomes a detrimental cycle when you're not prepared. So this is why I urge you guys in the community that whenever we have, say, a conversation about markets pulling back or retracing, no one here is talking about the market topping or we're never going to go back up. Like I said before, I'm extremely bullish for the rest of 2021. So I want to make that clear. Okay. My thesis has already been stated right here on January 4th, 2021. Unless these macro factors change, I don't see any reason for Bitcoin and crypto to be topping anytime soon. It's possible that I'm wrong and we have topped, we might go down further. I just don't see that as the case right now because the environment around us is so incredibly amazing that I don't see any other way that crypto cannot go into hyper mode over the next several months. Even if we do get a pullback towards, like I said, 50K or 45K or 40K, I really don't care because at least I'll be prepared to buy the dip. Question is, will you? Okay. So I do want to make that clear. So that's where I am right now, right? I don't care if this rising wedge breaks. I don't care if we go down towards 45, 40K. I'm prepared to buy the dip. All right. Because here are the other factors of Bitcoin that I am still excited about. Like I said, the MVRV score, pretty far away from this red zone area where we might be overvalued. So I believe we still have more upside. Even if we make it to 45K, we might double by the end of the year towards 90 or 100,000. That would be an amazing, gain that you might get, right? The other part of it is Peel multiple, okay? I used to talk about the Peel multiple in 2018-19. I stopped following it. I didn't pay attention as much because there were some people who had actually discredited the model. I really don't know if it's still as effective as it was, but let's just say it is, right? You can look up this metric, again, look into bitcoin.com. And this metric, so it looks at the supply side of Bitcoin's economy, Bitcoin miners, and their revenue. Now, of course, we know that the miners are generally the biggest supply holders in Bitcoin, right? As long as we stay under this red area and not too far extended into this red area, this implies that the miners are still healthily in profit. They're not in a pressured position to keep selling their Bitcoin, right? And in fact, one can make the argument that in this area, when things get excessively bullish, other people, along with miners, might start taking profit. So this is where you need to start being a little bit more cautious. So once again, just like the MVRV Z-score, Peel multiple is pretty far from this overvalued area. What does that mean? That again means that Bitcoin, in terms of price, has much higher upside left. Okay. The other chart that I generally pay attention to, let me see here. Where is it? Oh, there it is. Okay. So this is your 200-week moving average heat map. This talks about how extended are you away from the 200 MA. And when you are extremely extended well past the 200 MA, which is this purple line right here, this is where things get a little bit more heated up, meaning you might be a little bit too far extended, a little bit overvalued. Well, guess where we are right now? We're at 56, 57K, and we're kind of in this green dot area, which is almost this here back in 2017. So in this area in 2017, prices were at 5,700 and prices went to a high of an extended valuation of almost 20K, so almost 4X, right? So from where we are, 57K, let's just say we even doubled, right? Well, that puts us at about $114,000 if you were simply looking at this metric. So the point is, these three metrics that I've just shown you, the 200-week moving average heat map, the Pure multiple, and the MVRVZ score, all show you that there is still room left more for the upside. But that does not mean that in the near term that we cannot have choppy and muddy waters in terms of price action, where we might have a rangy like environment, something like this, and then break out, I don't know, in a week or a couple of weeks. And again, I look forward to the days where I may get that kind of deep pullback, because when we get that deep pullback, a few things happen, right? Number one, a lot of the excess in the market is weeded out. So the one thing that I pay attention to, you guys know very well, is open interest. I discussed this in the morning, right, in our morning video. I told y'all that at present moment, the futures open interest is extremely high. It's at 21.49 billion. This means that there is a lot of outstanding contracts out there in the system, which are not just spot, meaning there's not just spot Bitcoin being bought. There's just a lot of long positions open. I'm sure there's a lot of short positions open, but definitely not as much as long, right? I think everybody looks at this market and has clearly understood that this is a seemingly long only market. So when you have excess leverage in the system, okay, you have excess long contracts, which means you have, excess risk. How do you clean up that risk? Well, the market goes sideways for a little while. The market pulls down over the next, several weeks, bore people to death, right? And then you will see this open interest being cleaned up. Probably it'll drop by 30, 40, 50%. And I believe that once we get to the $10 to $12 billion open interest area, that will have cleaned up the system enough where Bitcoin can once again gear up for the next big leg up. Okay. And it's not necessary that just because the open interest has to go down by 30, 40, 50%, that the price has to go down by that much. Not at all. The way open interest works is it's just the contracts that are outstanding right now, open contracts, right? Open interest. That means that if price just goes down or goes sideways, even just 5, 6, 7% over the next several weeks, that is a lot of pain on long positions, because if you are levered up, your stop is probably in peril. You have to keep paying funding for a losing position. You might be close to your liquidation point, or simply you just get bored and you're starting to look for yield in other assets. You might move to the stock market. You might move to other cryptos. You might just go back into cash and wait. That's how you clean up leverage. Okay. And that's how you clean up that OI. So my thesis right now is that I believe in this area, we will probably go sideways, maybe a little bit further down, and we'll chop around maybe in a larger range. And the range might be something like this. Okay, this is probably the large range. Let me make this a different color so y'all can see. Okay, something like that. Right, this is the large range that I see. The lows are around 44, 45. The highs are around 58, 59. If we even stay in this range, in my opinion, we're still pretty damn bullish. You can make the arguments about, we don't have to go down and we're just going to keep going up, but that's not what the market is showing, right? The market, to me, at present moment, is very well positioned for a sideways price action. And that would be really, really good, because it seems like, in my opinion, the sentiment is pretty darn bullish. There's a whole lot of conversations about, NFTs or DeFi or Bitcoin going to 100K. And the best way to clean up that sentiment is just sideways, small retracements on the way down, but still keep that bullish trend intact. And that would be the most amazing opportunity for the rest of 2021. If we get that sideways, small retracement movement, into that 45, 46K area. Does that make sense so far? Are you guys with me? For those of you who are in the live chat, the Advantage members. Perfect. So, yeah, that's one thing that I want to clear up, because it seems like, whenever we have conversations in the chat, if anyone really even has a hint of mentioning a possible retracements for price action, it seems like the Bitcoin bullish army comes out of nowhere. And we then start getting into the discussion of, well, we can't go down because we have to keep going up. Well, yeah, it's great. If we go up, that's fine. But does it really hurt to be prepared? Right? That's the whole point. And once again, what we're saying is, if we pull back, that's an amazing opportunity to buy. No one here is saying that we have to sell and this is the top. I don't believe that at all. I think we're in an environment that is going to be incredibly lucrative for the rest of the year. And I know many people believe that too. We had Austin on the call several weeks ago, and he also believes that, even if bond yields go up, right? So you guys know, he and I discussed the 10-year yields right here. We both believe that even if we go up to, say, 2%, we came off the lows of 0.38 down here. Think about the movement that we've made to the upside. That's really not that big. It's like if your starting point is way the hell down here and you're pushing up even to 2%, that's not that big of a deal, right? So we can go up to 2%, 2.5%, and that is still not a big cause for concern for myself or Austin. But at the same time, if and when that does happen, growth, especially in the NASDAQ index or crypto or tech, will probably take a bit more of a beating. But guess what? When it takes that beating, you might get some incredible opportunities on the pullbacks. So we discussed, let's see, the 3 charts that I'm paying attention to. What else? Well, make sure you guys read this too, QCP Capital. I told y'all, again, Advantage members, I posted a link. Please do follow these guys, because these are some of the smartest traders, and it's a prop hedge fund from Singapore. Very, very smart people, and they provide, a good update every single week. And even these guys are calling for, the market to have a pullback, maybe mid 40s, low 40s, right? So this is not just my thought. This is not a contrarian thought. It is a thought, amongst pretty smart people, right? And then, of course, the indicators, all the metrics that I told you all about will tell you that even if we do pull back, not the worst thing in the world, okay? All right, let's see here. Are there any questions? Anything I can answer? Okay. I think the other part of the market that, one other metric that I believe is incredibly bullish is if you look at, the number of addresses with a non-zero balance, right? So basically these are your wallet addresses, from the last several years, you could clearly see that there is more and more people that own Bitcoin. And these non-zero balances aren't just, just a couple dollars here and there. I think there's a specific metric, the way they watch the balance and the amount of activity in those addresses. So I believe that these are real addresses and not just, fake made up bots or anything, right? So this is another, huge bullish metric that should tell you that there's probably more and more growth and adoption to be had. And so this should keep you bullish going into the rest of the year. Jake is asking about Radium. Well, I'm not going to discuss altcoins right now. I want to do that a little bit later or maybe tomorrow, because I really don't know what exactly is going to happen. I just wanted to make this video just for sort of the general assessment of how the market is looking, my thoughts on Bitcoin, the metrics that I pay attention to, et cetera. And this video I will actually be posting on YouTube for everybody. So I want to discuss altcoins and the other positions that I have with Advantage members only, because I don't want to release that to the general public, right? So we can have another video later tonight or tomorrow, okay? But for now, with my altcoins, you guys know very well, I haven't really changed my stance on anything. I'm pretty bullish on the alts that I own. And I will probably likely be bullish going into the rest of the year. And of course, Advantage members, you guys know already which positions I have. You can also check in the position updates channel. You have full access to this channel, of course. So you guys can go check at any time, how our position's doing, where my entry is, what our P&L is thus far, right? And then, of course, all you guys have access to the 5K account, all the video updates that I provide. So you can check that at any point too. And any given day, if you are an Advantage member, you will know exactly where I am in that account because I do live videos, with the account at least once a day or once every other day, right? So then I'm pretty transparent with that. Okay. Let's see. Are there any other questions? Oh, how will BTC pullback affect alts like SRM and FTT? I think not really a whole lot, in my opinion, right? I think a majority of the selling in Serum and FTT, I think a majority of that has already happened. Maybe they have like another bit of a pullback. Who knows? Maybe SRM gets to 430, 420. But here's the thing, right? Here's something that I've learned, okay, which is if you are long in FTT like we are at $5, okay, so Advantage members knew about this at the beginning of January. I told y'all when I was going long. We are currently up about 700%. Okay, here's something that I often see people doing. They'll try to sell somewhere near the top and they think that, okay, well, I'll wait for a pullback and I'll try to buy at this level. And then they buy, but then price goes down further. And they say, shoot, well, I should have waited. Let me sell some more, right? And let me rebuy back lower. But from here, what price does is it starts to pull back up. And you think, okay, you know what? It's fine. I think it's going to pull back some more. I'll add to my position, but then price goes up further. And then you basically lose money on the way down, and now you have less asset. So the one thing that I don't like to do is try to time the market and say, hey, I think this, this is probably the top, and, I'm going to sell my position right here, go into cash and try to buy lower so I have more ETH or FTT or Serum, whatever. But when you try to time the market like that, it really does not go too well. More often than not, people generally lose money that way. The other way people lose money is, say, for example, FTT is kind of going sideways. And then you see something like Theta, which is going up, right? And you're like, oh my God, Theta keeps making money. Let me sell my FTT and go into Theta. And then right at that time, Theta starts going sideways or going down, and then FTT starts going up, right? So you could see there's a lot of these small mistakes that people do over and over again. And it's really detrimental because what happens is you're losing asset, you're losing money, and you really didn't accomplish anything except more stress. So try not to time the market in that regard. You have to just understand the trend of the market. And if you really believe in your assets, if you really believe in the altcoins that you've invested in, all you have to do is just wait for the market to pull back and you can double down, right? Again, not investment advice, just letting you know that is the thought process that you need to sort of instill in a bull market, is be ready to double down on your bets, because you may not get opportunities like that again. And you sure as hell are not going to be able to time the market properly to buy the dip and sell the top. Is that understood? Let's see here. Perfect. All right. So I'm going to wrap up this session here because, once again, I just wanted to do a quick market summary of where my thought process is, with the overall market. I feel pretty darn good for the foreseeable next couple of weeks, unless barring any huge changes in the Fed and interest rates and all that jazz, which again, I don't really see happening. But until that happens, I still feel pretty darn bullish in the market. I'm not scared of sell-offs. You guys know very well we have protection in place for hedges. Advantage members know this. So make sure you guys read up on those hedges if you are interested. Other than that, I will keep you guys updated on my plans, whether I want to double down on my positions, whether I want to add to my hedges, whether I'll be raising more cash, etc. Okay, that's all I got. Again, none of this is financial advice. My opinion. Do as you please, whether you want to listen to me or not, follow my analysis or not. Okay, y'all take care. Cheers, and I'll talk to you soon.